Right, hello everyone. Now on to US30. So what we was looking at going into today, we had a bearish bias. Well, I had a bearish bias. So going into the New York session, I was looking for price to find resistance here, then give a nice downwards move around to New York Open. And you can see in a minute how that played out. And you can see how we managed the trades depending on what we took. So that is our bias. That was what we was looking at. Obviously, we're going to look out for other confirmations and we're going to go over it now. So all of this matches the US30 strategy. It's all can be found on my YouTube channel in a simple playlist. So the grey areas up here are previous premium sell areas and discount buy areas from New York sessions in the past. So I marked that up and you can see how it's acting as resistance right there. So that is why we was looking for a reversal today. If we go down to the 5 minute, we can see how that played out. So here we are. Let me just use this arrow. So this is the pre-New York. High volume time here. Starts pushing towards the upside. And then it takes this high here. Starts rejecting. So you could have got into a sell around here. And then you would need it to be managed by the time the New York Open took place. So let's say you entered on a rejection here, price then goes down, starts to go sideways, and then not much happens. You need that volume to continue in your favor by the time the New York session opens. So you would have got into a sell around here, and then you'd have closed around break even. So there was no real early sell. Whatever you did ended around break even result. Then we go into the New York Open, which is where the arrow is here. Price pushes up with the release, takes the previous high over here. As you can see, it's that major high to your left. So we're taking liquidity. That is your first sign. So that is a clear sell towards the downside. That's the one I took today. A nice clear sell on the release. Price moved down very quickly, started to break the pre-New York level and came down and took the first liquidity pull, hit the London Open here. So this area here, I should have took partial profits, but I was not on the charts at the time. So I didn't get to manage the trade by that time. I in fact had another sell around here as it started dropping. Price retraced all the way back up. This sell here was left with the stop loss up here, and this sell entry around here was moved to break even. Price continued up through the New York session, New York Open, and took me out with one stop loss here and one break even. So that was poor management in my at my end, but overall just one stop loss hit there. Price goes up, and because it moved quick, what I'd be looking for next is another sell attempt there. So if I got into the sell one more time, that downwards move there would have made back that stop loss hit from there. And this is a manipulation area. So before the New York Open, you've got an area running along there, which is your consolidation, fake out, impulse move down, another fake out up, and then retraces to this area where all the volume is. So that rejection from there is a bullish confirmation because it's rejecting from that consolidation area. So that downwards move would have needed to be managed by the time it got there. So that is the sell bias opportunities for today. An early sell, which ended in break even because it did nothing. One sell here, went down into profit. You'd have took partial profits here as it's clearing a liquidity pool and retesting a London Open. Price comes up again, then takes you out. By that time, you'd have been at break even. Takes the high once again and is in a reversal area once again. So because it's quick, that is a valid sell attempt. Get into the move. Let's say you just moved it to break even, then you got taken out of break even. Overall, you would have been in small profit or around break even. Now let's say you went into it with a bullish bias. Then obviously this is the New York Open. It pushes down, takes liquidity. Then you would have done a clear buy from there as it starts rejecting. By the time the New York Open is hit, you would have took partial profits, moved to break even and let it run. So that was one trade attempt with a bullish bias. As it retests this area, that is also a bullish confirmation. So you'd have probably risked a little bit less and took the buy from there, because you made so much on that upwards move. So you can see how overall in both directions you got setups, because it carries certain confirmations that follow certain rules. So even if you sold, you had a clear sell bias and you stuck to that, you would have still finished around break even or small profit, because you would have had to manage it well and with the confirmations that you're seeing on the chart, because we have to manage it by the time it gets to a certain area. Obviously if you had a bullish bias, it would have been nice and easy, push down, retest this area and started buying, and then it all continues in that favor. So yeah, that is the opportunities for today. No matter what your bias is, no matter how strong you stick to your bias, those are the opportunities you would have got today, and most would have given you profit before reversing. So it's important to stick to a strong way of how you manage your trade by looking at the confirmations and understanding what you see on the chart. That's why you can't really give the US30 strategy as signals, because everyone will manage their positions differently. Most people won't even be on the charts, and these moves do happen quickly. You have to enter when you see it, and you have to be confident in what you see on the chart. That is how you make profit, and that is how you trade confidently within a short amount of time. And that is how you can deal with the New York Open volume. There we go. That's enough for today. All the links you can want are in the video description. Take care, have a good day, and goodbye.